When I review insurance portfolios, most of them look surprisingly complicated. Multiple policies, riders everywhere, premiums that are much higher than people realize. But every once in a while, I see a setup that immediately stands out. Not because it's impressive, but because it's simple. Fewer policies, higher coverage, lower premiums. And when you see a structure like that, you can recognize it almost immediately. Today, I want to show you what a clean insurance portfolio actually looks like. Not perfect, not complicated, just architecturally sound. Characteristic number one, fewer policies, clear purpose. The first thing you'll notice is that there are fewer policies. Each policy exists for a very specific reason. No duplication, no overlap, no confusion about what each one is meant to solve. If you listed the policies on one page, you should be able to explain in one sentence what each one does. For example, this one protects income replacement for my family. This one handles hospitalization risk. And this one protects against critical illness. That's it. When the structure is clean, you don't see a pile of policies, you see clear roles. Characteristic number two, high coverage relative to the premium. The second thing I look for is something most people never calculate, the benefit to premium ratio. In simple terms, that just means how much coverage are you getting relative to what you pay each year? Let me give you a simplified example. Imagine someone paying about 200,000 pesos per year for an investment-linked policy that provides 5 million pesos of life coverage. If you divide the coverage by the premium, the benefit to premium ratio is about 25. Now pause for a moment and think about that. Every year, 200,000 pesos is leaving your cash flow to support 5 million pesos of protection. Most people never actually stop to look at the numbers that way. Now compare that with a simple term insurance structure. A term policy might provide the same 5 million peso coverage for roughly 20,000 pesos per year. That produces a benefit to premium ratio of about 250. Same protection, but about 10 times the efficiency. And in some cases, the difference can even reach 20 times, depending on the structure. This is why when I see a clean setup, the premiums often look surprisingly small relative to the coverage, because the structure is designed to prioritize efficient protection first. And this difference highlights something most people never hear. Insurance should solve risk, not absorb capital. Characteristic number three, minimal riders. The third signal is the absence of rider bloat. Many policies are sold with a long list of riders already attached at the start. Accidental death riders, additional coverage riders, waiver riders, various add-ons bundled into the policy. Each one may sound reasonable on its own, but when many riders are layered into the plan from the beginning, the premium often grows much faster than the actual protection being added. In a clean setup, policies usually have no riders at all, or perhaps one or two that are genuinely meaningful. The design is intentional. If something is included, there's a clear reason it exists. If there's no clear reason, it usually isn't there. Characteristic number four, life and health are separate. Another signal of a well-designed portfolio is intentional separation between life insurance and health insurance. These two risks are fundamentally different. Life insurance protects the family if income disappears. Health insurance protects against medical costs during life. They involve different risks, different timelines, and different cost structures. But many insurance products blend them together into one vehicle. When that happens, the design often becomes heavier and more expensive than necessary. Clean portfolios usually treat these risks separately. Each layer solves a specific problem. No blending, no confusion, just clear protection for each risk. If you wanted a quick mental test for whether your insurance portfolio is architecturally sound, you could ask three simple questions. First, what risk does this policy solve? Second, how much protection does it provide relative to the premium I'm paying? And third, if I were designing this today from scratch, would I build it this way again? For many people, those questions alone already reveal quite a lot. And if you'd like a structured way to walk through that review calmly and clearly, we created a simple checklist that guides the process step by step. You can comment audit below, and we'll share access to the Insider's Insurance Audit Playbook so you can review your own setup with a clear framework. Now, if you're watching this and thinking, my setup doesn't look like that, that's actually very normal. Most people didn't design their insurance portfolio all at once. Policies were added at different stages of life. One recommendation here, another plan introduced later, another set of riders or features suggested along the way. And over time, the structure becomes a collection of decisions rather than a deliberate system. And that's exactly the pattern we talked about in the previous videos. Not irresponsibility, just accumulation without architecture. A clean insurance portfolio doesn't look impressive. It looks intentional. Fewer policies, clearer purpose, high coverage relative to the cost. No unnecessary layering. When protection is designed properly, something interesting happens. The entire financial structure becomes easier to manage. Because once the protection layer is clean and efficient, everything else becomes clearer. Investing decisions, cash flow planning, long term wealth building. Smart professionals don't just accumulate coverage, they design protection deliberately. And when that foundation is sound, the rest of the financial architecture can finally do its job. So, start with structure. Everything builds from there. I'm Juan Casas, Principal Financial Planner at Beacon Wealth Advisory. Thanks for watching.